I think our friend Richard Bernstein would probably disagree with you. He was just on a few minutes ago saying avoid what he said were broadly consumer discretionary stocks and go to late-stage cyclicals like consumer staples, like utilities, like energy. You take a different tack, though maybe it's only in style and not so much substance, or in subtlety, not in a definitive way. Explain.
Yeah, thanks for having me on. I did hear that segment and admire his work. You know, we have a very constructive view of our space based on valuation, but valuation is not always a very good trading signal. And when we looked at trading patterns around past yield curve inversions, the pattern's pretty clear. You want to avoid these stocks into the inversion and likely for the next 6 to 8 months as investors digest essentially bad news. But then we tend to rip, and fairly early. I would consider this more of an early cycle play. And so you want to be invested at that moment. So ultimately, like fundamentally, we feel good about valuation, but it's not the best time to get involved in these stocks. We want to wait, and our signal would suggest we're perhaps 6 to 8 months away from a buy.
6 to 8 months away from a buy in the kinds of consumer discretionary stocks, the leisure stocks that we're going to get to. Did I understand you correctly there? Is that what you're saying?
That's right.
We're not there yet, but we're coming there, so don't be head faked away. And the couple that you like particularly are recreation names. One is Brunswick, the other is Winnebago. Explain why you see them as emerging winners, say, beginning 6 months from now.
Yeah, so we like companies that are gaining share with a strong balance sheet and an active buyback program. It could be a difficult 6 months, as we've just talked about. We want companies that have the balance sheet to go ahead and buy stock in their own company. Brunswick's a very good example. That company had an analyst day about a month ago, and I thought they framed the future quite well. In 2025, their plan is to earn $16 to $17.50, but they also provided a downside scenario in which they might earn just $6 if the market were to correct by 40%. And there we're talking about the boat or the marine market. Mm-hmm. So right now we're trading essentially at 12, 13 times Armageddon in their scenario. That's good value. But again, our trading signal would suggest you can afford to be patient, build the shopping list today, and then go ahead and buy as panic sets in.
And the other is, as panic sets in, wow. And the other is Winnebago. Explain the buy case for that and when.
Yeah, it's a similar case. Again, very high quality company. Winnebago has made a number of smart acquisitions under its CEO, Mike Happy, and they're taking share, I'd say, dramatically in the spaces they occupy. Our cycle neutral earnings power scenario suggests Winnebago could earn $7 to $8, which is much below what they're going to do this year. But in that scenario, it's trading at 8 times, very inexpensive. Mm-hmm. But again, people tend to get very pessimistic on our group just because it's such an easy purchase to delay. But Winnebago certainly has the buyback and the quality and the share gain opportunity that we're looking for in that shopping list.